Silver versus gold. Which one of these two precious metals are better for you? Well, in today's video, I'm going to talk with you about that, but keep in mind that everything I'm saying here is opinion and not financial advice. And instead of telling you what you should do, I'm going to tell you what I do, and I'll tell you the reasons that I do that, and maybe, especially if you're a new stacker, that'll give you an idea as to the inside of someone who's been stacking for, multiple decades at this point. So in front of us, we have some different gold and silver types, so we'll go over them. So we have gold eagles. This is a 1 ounce, a half ounce, a quarter ounce, and a 1/10 ounce gold eagle. So right here, we have 1.85 ounces of gold. And that is a lot of money. So if we look at our app here, we can see that at the time of this recording, you can see right now it's February 27th, even though you won't see this right away. It is $2,884. So if we grab our calculator and take 2884 and we multiply that by our 1.85, because we have 1.85 ounces, you can see that what we actually have is $5,335 in gold. Now, right here, we have a 1 ounce silver eagle, a half ounce round, a quarter ounce round, and a 1/10 ounce silver round. And if we look back at our app, you can see silver is trading for $31.57 an ounce, a massive difference. So if we take our calculator and multiply 31.57 times 1.85, you can see our difference, not our difference, but our value is $58. So if we take our 53.35 and divide that by 58.40, what we're actually going to get is what we call our GSR, or our gold to silver ratio, which is 91:1. In other words, it would take 91 of these right here, which, by the way, are bigger in diameter. You can see that very clearly because gold is a denser metal. It would take 91 of these right here to equal the same value of just one of these. So you can imagine there is a massive difference there. And the reason I'm showing that to you is it starts my first point about the difference between gold and silver. You see, silver is very bulky, it's very heavy, and it takes quite a bit of it to have a significant amount of value. Gold, not so much. As I just said, we have well over $5,000 right here in just these 4 little coins. I could slip those into my pocket and walk away with them and no one would know the difference. If we were to do that same thing here with our silver, if we were to take the same exact amount of silver right here, we would have to take 1.85, because we have 1.85 ounces, times 91, it would take us 168 ounces to equal the same value. That would not be very easy to put in your pocket. That would be 8 of these tubes, and you would still have to have 8 loose silver eagles as well to get into your pocket. Very heavy, very bulky. So that is the reason that a lot of stackers, especially as they've been stacking for a long time and they accumulate more and more precious metals, they start going to do more gold. And that's because of how easy it is to store and carry and how much value you have in such a small space. But that value difference can absolutely be an argument for silver, not against silver. And just so you guys know where I am, what I do is I actually stack a lot more silver than I do gold. Clearly I stack both, but I prefer to stack more silver. And one of the many reasons is because silver is so much lower in value that it's actually a lot cheaper for silver to be divisible. Now, yes, gold can absolutely be divisible. This is a 1 gram gold bar. It takes 31 of these to equal this 1 ounce gold eagle here. And they even have this thing right here called Goldbacks, which, just so you know, I am not a big fan of. I got these years ago for free from the Goldback company, and I still think to this day they probably hate me because I didn't give them a glowing review. But these are 1/1000th of a troy ounce of gold. So it would take 1,000 of these right here to equal the same amount of gold as 1 ounce. So gold is very divisible. Here is the issue with divisibility in gold. While 1 ounce gold coins like Cougarans and Eagles like this, and even 1 ounce gold bars, the premium on them is actually quite low. It's usually only a few percent over spot. When you start dividing it, those premiums skyrocket, and I mean quickly. So a good example is a 1/10 ounce gold eagle has a premium today that is around 12 to 15%, depending on where you buy it. So even though the value of this gold eagle right here is today around $290, you're not going to get one for less than $330, $340, $350, depending on where you buy it. That is a massive difference in premium. The premium is actually better than silver on 1 ounce gold eagles, but way worse as the fractional stuff starts to come to play. And another good example is 1 gram gold bars right now are going for somewhere between $105 and $110 per bar. So that is well north of $3,300 per ounce. And then when you talk about these things and really fractional gold, for example, this Goldback right here, the premium on these is insane, and it's primarily the reason I don't like them. See, I do believe that the 1/1000th of a troy ounce of gold is actually in this bar. I'm not questioning that from the Goldback Company at all. All of this right here, this is 100 Goldbacks, is 1/10 ounce of gold, just like this eagle. I believe that if I were to have it assayed, all the gold would be there. However, these are going for over $5.50 per Goldback. That means that to get an ounce of gold in Goldbacks, I would need to spend $5,500 or more, depending on where you buy them, versus just being able to buy this 1 ounce gold eagle for around $3,000 today. So even though gold is incredibly divisible, as I said, I do believe that silver is actually just as good, if not better, for divisibility. And we're going to talk about that in just a minute. But really quick, guys, we do have a video sponsor today, so we're going to run that real fast, and then we'll be right back to get into it. Giant Mining US BFGFF is proud to sponsor today's video. On February 25th, 2025, President Donald Trump signed an executive order addressing the threat to national security from imports of copper, officially designating copper as a critical mineral. The U.S. produces 1.2 million tons annually, but relies on imports for 45% of its supply, with over 50% global smelting controlled by a single foreign producer. Despite significant domestic reserves, the nation lags in smelting and refining capacity, posing risks to infrastructure, defense, and energy security. As President Trump prioritizes American energy dominance, Giant Mining is working to reduce dependence on foreign copper and strengthen domestic supply chains. Located in Nevada, one of the world's top mining jurisdictions, Giant Mining Majuba Hill Copper Project is a past-producing mine with a strong historic production record. Ongoing multi-year exploration continues to expand in-ground copper resources, reinforcing the project's potential for future development and production. Over the last 4 years, the company's geologists have significantly expanded the copper resource, and in September 2024, they hit their best-ever drill intercepts with 74 feet of 2.6% copper and 30.1 grams per ton of silver, which are exceptional grades for an emerging U.S. copper producer. Their treasury is fully funded for an aggressive 2025 exploration program, positioning them to capitalize on the looming copper supply crisis. Major players like BHP Billiton and Rio Tinto warn that copper supply will not meet the demand surge from AI-driven infrastructure growth, and Goldman Sachs forecasts that copper could hit 15,000 per ton in 2025, with deficits worsening through 2027. Meanwhile, Giant Mining stock price has already doubled since Trump's re-election, but remains 90% below its 2023 peak, creating a compelling opportunity. The Majuba Hill project has a proven production history, yielding 2.8 million pounds of copper, 184,000 ounces of silver, and 5,800 ounces of gold. With existing power, water, roads, and processing capacity, it is a turnkey operation located in a mining-friendly state. Giant Mining CEO David Greenway stated, and I quote, "Majuba Hill is a significant past-producing copper project covering over 9,600 acres in one of the world's top mining jurisdictions. With excellent infrastructure, including U.S. Interstate 80, transmission lines and power access, and a proven drill history of 104 holes totaling over 83,930 feet, we are well positioned for growth. We are fully funded for an active year of exploration and development, and 2025 could be our most exciting year yet. Do your homework on Giant Mining. It's ticker BFGFF, and I'll put information in the description below." Okay, so when I talk about silver being better for divisibility because of the price, let me be very, very clear, because many people probably saw these things on the table and was hoping that I wasn't going to talk about them. So let me say what we have going on here. This is a 1/10 ounce round. These are not really good for stacking. The premium on these is way too high. I was looking online just before I recorded this section of the video. 1/10 ounce silver rounds are going for like $4.50 each. That's the cheapest I could find. Maybe you'll find them cheaper, but I looked at a bunch of different sites. $4.50 a piece is $45 an ounce. Hard pass. That's a premium of nearly 50%. Now, 1/4 ounce rounds are a little bit better. It's somewhere between 38 and 42 per ounce. So a little bit better, but still you're paying a pretty significant premium. And at that point, you may as well just get fractional gold. Now, 1/2 ounce rounds do get a little bit better. The premium on 1/2 ounce rounds is close to that of a silver eagle, so you're paying a little bit more than a 1 ounce round. However, the best way to get fractional silver right now, and this has not always been the case, but it is currently, as I record this video, is 90%. Now, the premiums on 90% are still really, really low. In fact, the wholesaler that I spoke about a few weeks ago that were selling 90%, 2 retailers, of course, so you have to buy it from them. They have to make something, but they were actually selling to dealers 90% less than melt. In other words, for every dollar, like let's say, in fact, let's do the math. So if we take 31.57, we're going to get melt price here. And keep in mind, melt price doesn't mean we're melting this, but we take 31.57 times 0.715, and you can see our melt price is $22.57 per dollar. That means that every 4 quarters or 2 half dollars or 10 dimes from 1964 and before, however you add it up, equals $22.57 worth of silver. And I was just recently at a coin show, and I've talked to some coin shops who are selling it really close to that. So you can get silver in fractional form ready to go for very close to just what it trades for on the spot price. You don't really have to pay much of a premium at all. There's a little bit of a premium, but it's not very much. If we compare that to our 1 gram gold bar at $110 per gram, we take 110 times 31.1, you can see that's $3,421 an ounce. Now, if we divide that by our 22.57, that means $151 in face value of 90% silver. And if we take our 151 here and multiply it by 0.715, and you can see that's 108 ounces of silver, which would mean that we are now at 108 to 1 gold to silver ratio instead of the 91 to 1 that we had earlier. So a very, very big argument for the divisibility of 90% silver and how cheap it is to get right now versus getting divisible gold like a 10th ounce eagle or a 1 gram gold bar. And God forbid that you spend a ton of money on fractional gold in these things. But there is one final thing, one big thing I want to share with you. And this is the number one reason. I know I've talked about other reasons, but this is the number one reason that I prefer silver over gold. And that's because I believe, my personal opinion, and I'm sure some will disagree, and that's fine, but I believe that silver is way more undervalued than gold. You see, right now, gold and silver are coming out of the ground at around an 8 to 1 ratio. So every 8 ounces of silver mined, there's 1 ounce of gold. That being said, they are sitting right now at 91 to 1 on the COMEX. 91 ounces of silver to 1 ounce of gold. Now, that would make sense if there wasn't a big demand for silver, but that's not the case at all. Silver is actually in higher industrial demand than gold is. And while I've said many times that there is no silver shortage, and I stand by that today, there is no silver shortage. There is a silver deficit. In fact, the last few years, we have actually mined less silver than we've had demand for. So eventually, it could be 10 years, could be 50 years, I don't know. But eventually, if we keep producing deficits and silver coming out of the ground, there is going to be a shortage. Now, when that happens, what's going to happen? Well, they're going to have to mine more. And while silver is primarily mined as a byproduct of other metals, for example, copper and even gold, if silver had to be mined directly for the silver, the cost to mine it would go up. Additionally, they would have to get it from people that have it and refine that silver, whether it's 90% that gets melted down or rounds or whatever it may be, turned into COMEX bars and sold out. My point is that right now, even though it's coming out of the ground at 8 to 1, it is priced 91 to 1, and it has a higher demand than gold. Silver is actually in higher demand today than it has been in a very, very, very long time. In fact, I think the demand for silver right now is higher than it's ever been, period. So the fact that it's so low today doesn't even make sense to me. And that's why, while I can't predict what the spot price of silver is going to be, I have no idea. It could go down to 20 again. I don't know. I'm not saying it won't. What I am saying is that I believe that it is way, way, way more undervalued than gold. And just to put it into perspective, let's say, I know there are people that have varying opinions on this. Some people say silver and gold should be 50 to 1. Some people say it should be 75 to 1. Very few people say it should be 91 to 1. But let's just say you're on the more conservative side and you believe that silver and gold should be 75 to 1, okay? What has to happen for it to get back to that ratio? Well, one of two things need to happen. Gold needs to go down in value or silver needs to go up. And in either one of those scenarios, or maybe they both, gold goes down and silver goes up. My point is that in any of those scenarios, silver's the better buy. So in my opinion, and I do stack gold as well, obviously, I think silver is the one I want to keep stacking because I do believe that eventually its true value will be revealed. Hopefully during my lifetime. If not, maybe during my kids when it's their silver. I don't know. But silver is where my heart is. It's where my love is. That's why this channel is called Silver Seeker. And I will not stop stacking silver. So gold is awesome. Gold's great. I love gold. I love the beauty of gold. But silver is really where I believe my personal opinion, not financial advice, I believe where the future is as far as gaining value. So there you go, guys. I hope you enjoyed today's video. If you did, do me a favor, don't forget to like and subscribe and leave a comment down below and let me know what you think, because I always love to see what you guys think about what I talked about. So leave that comment if you will. And other than that, have a great rest of your day, and we'll see you next time.